conceptual rather than.
All right, now we're ready to begin.
Ready to go. Okay, I'm calling the audit committee meeting to order. We do have a quorum. We have the following action items. Number one, resolution of the audit committee of the City University Construction Fund, approving the minutes of the audit committee November 4th, 2016, number 2241. Are there any amendments to the minutes?
No amendments, Mr. Chair.
Any discussion?
None.
Could I have a motion to approve the minutes?
I move to approve these minutes.
Okay, second it. Is that, yeah, okay. Fine, all in favor?
Aye.
Aye. Okay, any abstentions?
I'll abstain based on the fact that I wasn't
Okay,
present.
fine. All right, resolution number two. Resolution of the City University Construction Fund approving the annual certificate for fiscal year 2019. Resolved that the Board of Trustees of the City University Construction Fund approve the annual certificate for fiscal year 2019 dated November 1, 2017 in the form attached hereto, and be it further resolved that the acting chairman of the fund is hereby authorized and directed to execute and deliver the annual certificate on behalf of the fund. I call on John Antonelli, Deputy to the Executive Director of the Construction Fund, to explain the item.
All right, what this resolution seeks to do is it allows for the approval of the annual certificate, which is a document that we're required to prepare under the Ed Law, Section 6274. And what that does is that projects the expenditures going through June 30th of the current fiscal year, and then what the dollar amounts will be going forward for fiscal 19. And it covers the tuition that's transferred to us from the university. It projects the cost of administration to operate the fund. And it also talks about the outstanding debt that needs to be paid on all the project-backed bonds, which were the pre-PIT bonds, pre-personal income tax, which was prior to 2003. After 2003, the bonds are paid by the state and not reflected on our financials. To accompany that, we provide audited financials. And to do that, we have our auditors here, PKF, O'Connor Davies. We have Sam Bolter, who's the senior manager, and Jonathan Zuckerman, who's the partner. What they will also do, since this was an issue raised at last year's audit committee, it asked for a discussion of cash flow. They're going to do a presentation on that as well. So I think we can sort of begin. They have a PowerPoint, and I'd like them to take us through it. So Jonathan and Sam.
All right, thank you, John. Just to introduce myself, my name's Jonathan Zuckerman. I'm an audit partner with the firm. I've been with the firm for 16 years, and been Sam Bade here as senior manager. Been with the firm 10 years. Again, both started off as staff, worked their way up through the ranks, etc.
Can I just interrupt you for a minute? You gentlemen have this, so if you want to go through it, you should have a copy of it.
I got it right here.
Okay.
Right, there's a hard copy and there's not a
There's a
PowerPoint.
copy you can watch on the screen.
Okay, this is just an overview of our presentation, but just to talk about the audit team, Sam is the senior manager in the field, in charge of planning and making sure the audit is executed in accordance with our audit plan. I'm in charge of the overall audit team, also coordinating with the client, with Sam's help with Dan and John. We also prepare the funds Form 990. We have a tax-exempt organization partner, and then his team who prepares the, I don't know what happened there. There's a technical difficulty with the,
We locked in with Albany.
yeah, okay. So maybe we can just refer to the slide deck, print it out then. But in terms of the timing, the audit was performed in accordance with our audit plan. We did have discussions throughout the year with Dan and John regarding the fund. The field work was conducted in August. The draft financial statements, which were prepared by Dan, were provided to us in a timely manner, and comments were reviewed and provided in the document. We received full cooperation from John, Dan, Vincent Bolello, as well as Andy Chang. Just regarding our responsibilities for an audit, are to present the financial statements, make sure that they're presented in conformity with accounting principles generally accepted in the United States of America. Part of our audit, we obtain reasonable but not absolute assurance that the financial statements are free of material misstatement. We don't look at every single transaction, but we do take a risk-based approach and put more emphasis in the higher risk areas of an audit. As part of our audit, we consider internal control for determining our audit procedures. We do not audit internal control, nor are we required to audit the internal control over financial reporting. In the event if there were any material corrected and uncorrected misstatements, those would be provided to management and communicated to those charged with governance as part of our audit. As part of a financial statement audit, under our audit standards, we're required to conduct our audit with professional skepticism. Basic terms, trust but verify. We get independent third-party documentation to corroborate the balances reported by the fund. Also, the fund is required to present a management discussion and analysis, and we do evaluate that presentation to make sure it's consistent with the information provided in the financial statements. Any significant matters related to the audit, if there are any significant deficiencies and material weaknesses, we would be required to communicate that to the fund's board of trustees. If we became aware of any fraud or illegal acts, we would make the board aware of those. And also, if there were any unusual accounting areas, unusual accounting treatments to certain transactions and estimates, we would be required to communicate those to you as well. Just on slide 5 here, we would just discuss the responsibilities of management and those charged with governance. Amongst the responsibilities of management is to make sure that they comply with laws, regulations, and provisions of any contracts or agreements, providing any financial records and related information that are requested by the auditors. And then also, at the completion of our audit, we provide Dan and John with a management representation letter. A draft of it, they've signed it and they provide it to us, representing certain items for the audit. And those charged with governance responsibilities to communicate with the auditors and make sure they're overseeing the financial reporting process. Also, together with management and those charged with governance, making sure a proper tone at the top is communicated, making sure that there's certain entity level controls in place and to fund, and making sure that proper policies are designed in accordance with the fund. A lot of this is done through the city university, through their policies and procedures. I'm going to turn it over to Sam now, who's going to discuss our audit scope and approach.
Thank you, Jonathan. This slide and the following slide is a summary that lists what our audit fieldwork entailed. I'll go through them one by one. The first bullet, internal control over financial reporting. Under U.S. auditing standards, we're required to obtain an understanding of the fund's internal controls. We performed walkthroughs of the fund's internal controls, specifically in regards to cash receipts, cash disbursements, and financial reporting. That helped us develop our audit plan. As Jonathan mentioned before, we're not required to audit internal control, but at least gain an understanding. Work was performed in accordance with our audit plan. No deviations from the predetermined audit plan. Also, as Jonathan previously had mentioned, our responsibility as external auditors is to provide a professional opinion on the City University Construction Fund's financial statements. I'm happy to report that our independent auditor's opinion contains an unmodified opinion, which means that there were no deviations from U.S. generally accepted accounting principles, nor were there any scope limitations that prevented us from providing an opinion. Our audit was concluded that the financial statements were presented fairly and in accordance with U.S. GAAP. The following bullets are the significant areas that we audited, particularly the significant balances that we substantively tested. Cash and short-term investments, we confirmed all cash and investment balances directly with the financial institutions. And a very important part of our audit was in connection with the contracts payable in connection with the construction in progress. Our audit procedures included testing over proper cutoff, which means that we ensured that any construction projects that were ongoing and any were properly accounted for to the balance sheet date through June 30, 2017. Any work performed was properly reflected in the contracts payable balance and on the statement of financial position. The audit of the contracts payable was audited concurrently with the receivables due from DASNY, since any construction costs are subsequently refunded by DASNY. And on moving forward, we also perform procedures over tuition and fees, appropriation of project funds, most of which we confirm directly with both the New York City Comptroller's Office and with the various CUNY offices, finance departments. And we also perform procedures over payroll and related expenses, and also to ensure compliance with laws and regulations, of which there was no deviation. Going on to the next slide. We also perform other procedures, including ensuring that any material subsequent transactions were properly disclosed and recognized in the financial statements. We became aware of no such transactions. We also ensure that all transactions with related parties or affiliated entities are properly disclosed in the financial statements, which they were. We also make inquiries of management in regards to fraud and illegal acts. We became aware of no such instances of fraud or allegations of fraud within the fund, nor did we become aware of any illegal acts. And last but not least, we also obtain the management discussion and analysis that's prepared by management. The management discussion analysis, you'll see in the final issued statements, is required by the Governmental Accounting Standards Board to supplement the financial statements. It precedes the financial statements, and it explains certain fluctuations that occurred from last year. We reviewed the management discussions and analysis with management and ensured accuracy and determined that it was reasonable. And moving to the next slide is our certain highlights on the financial statements, particularly the large fluctuations from the prior year. When you look at the statement of financial position, you'll notice that assets increased by approximately $10 million, which is about 15.5%. That was mostly due to an increase in cash, which itself is a function of timing of project-related funds coming in versus project funds utilized or paid out. You'll also notice that current liabilities increased by approximately $10 million as well. That was mostly an increase in the contract payable liability for the construction costs and an increase in project advances. On the statement of activity side, you'll notice that both operating revenues and operating expenses decreased by about $68.9 million or 3.9%. That was mostly due to a decrease in the tuition and fees, which itself is a function of timing. And on that note, I'm going to turn it back to Jonathan Zuckerman, who's going to discuss cash flows.
One quick question.
Yes.
So the decrease was a result of a reduction mostly in tuition?
Yes.
And that's because under the old construction fund, they had that lockbox set up, right? So the construction fund still collects tuition?
The construction fund accepts tuition that's collected by the university.
Fine.
And it's transferred through us to the city.
Right. And that was primarily as a result, and before DASNY issued bonds, when we used to issue bonds. That
At one
was how-
point, the tuition backed the
Right.
bonds.
Okay,
As opposed to the
good.
personal
Okay,
income.
we're all on the
bonds.
same page.
Right.
Okay, thank you.
I have another question on that, though, because I saw the decrease also and saw that there's an issue with the tuition. Is there a certain percentage of tuition that is held back and not transferred to us, or is it all because of just the reduction in tuition cost?
The amount of tuition is determined by the university that gets transferred to the city. So there may be a certain portion that they're allowed to apply to other programmatic activities. This is sort of set by that office.
They only transfer to us what we're gonna transfer to the city.
Right.
So I don't think it's a decrease in the way we look at it, it's a decrease in the number of students. It's just a decrease in the amount that they transfer to us to transfer to the city.
Right.
So I don't think you should read this as a decrease in tuition.
Right,
meaning-
that was my
It's
next.
Yeah.
not, it's not representative,
That's
it's
where I was
not
coming from.
representative of total collections.
Got it.
Right, yeah,
Right.
yeah,
That's
all
a
right,
good-
that helps to explain it better, because I know that
Right.
there's certainly an increase in the number of students,
Right, I was trying to figure
you
that
know,
out.
throughout
Right.
the system, and so the fact that there would be a decrease is
Right.
questionable to me.
Right.
But if what you're saying is that, what I'm hearing, you know, is that the amount of, that there's a determination as to what amount will be transferred over to the construction fund,
Right.
you know, out of that whole
Right,
tuition
and
mix.
that's made by the CUNY side.
Right, and those are set in certain budget assumptions, you know, the
Let-
city's revenue assumptions.
Let me just ask you this, are there still bonds outstanding that were issued by the construction fund before DASNY took
No,
over?
no, it was always DASNY.
It was?
It was
Okay.
always DASNY, it just,
Okay.
it became how they're funded.
Okay,
They were initially backed by appropriations.
Right.
And they were, and the collateral of the project,
right,
as opposed to now where they're fully backed by personal income tax.
fine,
And that shift occurred in 2003, but it was always through DASNY.
okay, right.
And I just have another question about the fraud piece, that there are no instances or issues of fraud and irregularity, you know, within the areas that we're responsible for under the construction fund?
Yes.
Is that what the audit has?
Yes, yeah,
that's
so
correct.
basically, as part of our process, we do fraud interviews with the members of the fund, the employees of the fund.
Okay.
Look at that, and then as part of our audit, we take an unpredictable approach to certain transactions. And then also, again, we confirm all the revenue, pretty much all, like I say, all the assets as well. So this is all confirmed with other entities within the state, the DASNY, the bonds and everything. So it's very difficult. And we look at signature controls, you know, for approving wires, et cetera. So all that's part of our fraud detection procedures.
So within the MD&A, what you do also validate that the controls that we have in place are adequate and appropriate?
We obtain an understanding of the controls. We're not required to audit the internal controls under the audit standards, but as part of that, we do obtain an understanding. As part of a financial statement audit, we do, again, as I discussed, perform certain fraud procedures to that effect. Thank you. Okay, so I'm on page 9, with discussion about the cash flows. So just if you have to look at it, a balance sheet is basically a snapshot of the financial position of the fund at a point in time. Looking at the cash balance at June 2015, it's approximately $34.9 million. June 2016 was approximately $23.5 million. And at June 30, 2017, increased to $33.0 million. So I think to look at the opening balance of 16, we need to understand what happened in the prior year as well. So referring to the second bullet, in terms of the decrease in cash, was approximately $11.3 million in fiscal 2016. And that related to basically timing of project fund payments and under some of the contracts that were ongoing, that were made to construction contractors. Such payments during fiscal 16 were $144 million. And then the project funds received by DASNY were just under $138 million. So of that $11.3 million, $6.4 million of that was attributable to just the flow of funds for the contracts. There was also a cash disbursement of $1.3 million made to a vendor for construction performed at the School of Public Health. And then just other timing of operational type payments that were made in June 30th for accounts payable and accrued expenses, and that was $3.6 million. Noting that the cash balance did increase by $9.5 million this year. The main driver of that was timing of project funds received, basically advances from some of the schools. There was a $5 million advance from BMCC. Hunter College, there was a $1.8 million advance, and Baruch, a $4 million advance for some projects going on in the future that hadn't commenced as of June 30, 2017. increase was offset by a $2.5 million in connection with some other operating payables and payments of disbursements and payroll, et cetera. So just moving on, just a small little chart here discussing the balances and the changes from period to period. So I'm going to turn it over to Sam now. As part of our audit, we are required to make certain communications to the audit committee as part of our audit. So Sam,
I'm so sorry.
Oh, go ahead.
If you could just go back to that other chart for
Yeah.
a second. So is there anything about our procedures that, I mean, so like when you look at this, you know, we see spikes, you know, in terms of cash balances. And so from your standpoint, is that good news or is that bad news? And is there a change that may be required, you know, in how we are managing the flows and the timing? Because you note that the fluctuations are based upon timing. And so what about that timing needs to change, or is that appropriate?
well, I guess good question. I think there's a couple of things. Is where's the cash coming from upstream? Is that being remitted to the CUCF timely? But again, that may be triggered by when the projects, you know, when there's certain bills remitted to the fund, when those are due and payable. So again, if something is provided to the fund maybe closer to the balance sheet date one year, and maybe in a prior year they were provided earlier, again, it's a lag. So it's a time and it takes time. So it could be related to timing of invoices. It's just basically a multitude of factors. But if there's any kind of inefficiencies, again, we're only responsible for the fund, so we only can see it from a fund perspective. We don't see the whole picture. But again, that's something I quite can't answer for you. You can just give ideas. But
I can elaborate on that a little bit. Since all our payments for projects that are handled by CUCF are, you know, we use bond proceeds. Bond proceeds cannot be advanced to us. So the only way we can earn the money to sort of pay the contractors is upon receipt of an invoice. So the timing issue is when the work is completed, when we get the invoice, and then only then can we request it. So if for some reason, you know, a payable comes in, that could affect the cash flow. So there's really no way to change that because it's driven by the events that occur and the sequence of events as they occur.
Can I give an example? You know, just a real world example with us. Okay, so at the end of the prior fiscal year, 16, we owed the city of New York $16 million roughly in that ballpark. And that was because the city of New York, after every month, we reimburse the city of New York because the money comes out of our account with them, and then they're the trustee of our account. So we paid that $16 million in July, immediately in July of 2016. At the end of this year, I think we only owed about $11 million. So you have a $5 million swing there. So we went out of pocket $5 million more on that at the beginning of the year than what we had, you know, than what we owed them at the end of this year. So it's those types of swings. You know, we can talk about payroll. We get reimbursed payroll from the state. Year over year, these things fluctuate. We really don't have any control over that. So that's with accrual accounting, we're able to account for it. You know, next year, we could very easily see that the cash doesn't move much at all. It could be within $1 million. It all depends on the timing of everything at the end of the year, beginning of the year sort of
Right.
payments.
And as I said before, it's driven by when the expense is incurred, because the revenues are only earned after the expense is incurred, and then only then can we draw down on the bond proceeds, because they cannot be advanced.
Okay. All right. Thanks. Thank you.
All right.
I'm going to turn it over to Sam.
All right,
He's gonna go
thank
through
you,
the
thank you,
required
Jonathan. Yeah, as Jonathan had previously mentioned, under U.S. Auditing standards, we're required to communicate certain parts of the audit with you. So to start, our auditors, our responsibility under auditing standards, we've communicated that through the form of an engagement letter that was provided to management for signature prior to the audit field work. The next one is accounting policies. Management the annual financial statements. There were no new accounting policies disclosed from, that were disclosed that were not in prior year's financial statements. Those accounting policies are summarized and disclosed in Note 2 to the financial statements. We're also required to communicate to you whether there were of any significant unusual transactions that would have occurred during the fiscal year. We did not become aware of any such unusual significant transactions. Going on to the next slide. Page 13 discusses estimates and management's judgments. There are certain accounting estimates that are made by management that are considered sensitive due to their impact and their significance to the financial statements. The main estimated amount is really the contract payable liability at the end of the year. Management projects the amount that's payable to the construction contractors based on the work performed. Our audit procedures ensured that these ending balances were reasonable and are a very good indication of the work that was the construction work that was performed through the end of the year. And as I mentioned previously, the construction contract payable amount goes hand in hand with the receivables from DASNY, the Dormitory Authority of the State of New York, because any work performed or any work incurred on the construction contracts is then reimbursed by DASNY. So as I mentioned, our audit procedures, we were very happy with the balances, and we ensured that our audit procedures ensured that the estimates were reasonable and presented fairly. Moving on to the next slide, discusses financial statement disclosures. There are certain footnote disclosures in the financial statements that are very sensitive to and may have somewhat of an impact on whoever's using and reading the financial statements. Note 4, that discusses the commitments, any future rental payments to DASNY, and Note 5, which summarizes transactions with affiliated entities, mainly CUNY or the Research Foundation, we found to be the most sensitive disclosures. But at the end of the day, we consider the financial statement disclosures to be consistent and clear. We're also required to communicate to you whether there are any difficulties encountered during our field work. We're very happy to report that we had no significant difficulties in dealing with management. We had the full cooperation of Mr. Dan Rothbaum and Mr. John Antonelli. We want to thank them for their cooperation throughout the audit process. Next slide, page 15. In short, we had no disagreements with management during the course of our field work. We were not made aware of management consulting with any other accounting firm in regards to any auditing or accounting matters, nor were we aware of any significant issues discussed with management prior to retention. And moving on to the last slide of the required communications. Under auditing standards, we're required to confirm our independence throughout the audit. I'm here to tell you now that PKF O'Connor Davies remain independent in both fact and appearance throughout the audit. And last but not least, corrected and uncorrected misstatements. We're required to communicate any misstatements that were either not corrected by management or were required to be corrected by management. I'm also happy, lastly, I'm just very happy to report that we did not become aware of any such misstatements. And that ends the required communications part of the presentation. And on that note, I'm going to turn it back to Mr. Jonathan Zuckerman, who's going to discuss internal control matters.
Thanks, Sam. As part of our audit, as I said, it's a financial statement audit. We don't audit the internal control, which mainly gain an understanding of it. But in the event during our financial statement audit, if we came across an issue where there was an issue with the design or effectiveness of an internal control, we would be required to communicate that to those charged with governance in writing if it was deemed to be a significant deficiency or material weakness in internal control for financial reporting. We do have the definitions of each of those items there on the slide. I'm happy to report that we didn't become aware of any material weaknesses or significant deficiencies as part of our audit. That's basically the completion of our report. Just a couple of restrictions, just intended for CUCF management and those charged with governance. This presentation shouldn't be used by outside parties. Happy to entertain any questions that the board may have. Thank you again for inviting us to the meeting. And, look forward to any questions or comments you have.
Okay, any questions or comments?
First of all, very good reporting, I would say, from the firm, and also from John and Daniel in terms of, they're managing the situation and providing all of the data, so that way we can come up with an excellent report. I have one question concerning our net positioning, which maybe John and Daniel can answer. The net positioning has to do with the relationship between assets and liabilities. And so that's changed from last year, 2016, to now, and I just want to see if there's any information or insight that can be provided, to myself and the other trustees regarding that.
Want me to take it?
Yeah, if you want.
The net position changed year over year by only $25,000, $25,774, and the reason for this is that in the prior, we're really only going to have a change in net position outside of operations. Because operations are the tuition and fees collected and paid; it's always the same in the year. The appropriations collected and paid, always the same in the year, and of course the what Jonathan and Sam are talking about, the project funds. At the end of the day, receivables and payables booked at the end of the year have a corresponding revenue and expense journal entries. Those are always the same. By law, we're a non-for-profit organization. We can't turn an operational income. The only changes you're going to see from year to year, primarily, there could be changes, but that would be out of the ordinary on operating. I don't want to say never, are in the non-operating revenues and transfers. This year, we didn't have any significant transactions for a lot of money. Last year, we paid out $1.3 million out of our fund, for a CUNY-related project. This year, we didn't have such items, so we had small changes. We had roughly almost $40,000 in investment income off of our $5.5 million Treasury securities. We had a small payment of $22,000 for an administrative expense for the City of New York. And then we also had a small amount of other income from an MWBE conference of $9,500. All that nets to, for a fund that takes in and transfers out well over $3 billion, the ultimate change was only $25,000 in the net position. It was
Relatively insignificant.
outside of the operations, there was very little that happened with the fund.
Okay, that's helpful. Thank you
Bill,
very
you
much. I appreciate
satisfied?
that. Yeah, no, that's really good. Thank you. I appreciate that.
Okay, all those in favor of accepting our auditor's report? Aye.
Aye. Did you're putting forth a motion, or we,
Yeah.
Mr. Chairman,
I thought.
are you asking for a motion?
I second the
Second
Oh, you
motion.
did? Oh, okay, I'm sorry.
Sorry.
No, yeah, okay.
Motion seconded. All those in favor?
Aye.
Aye.
Aye, and obviously there's no opposition or abstentions. Motion carries.
Thank you very much. Thank you. Really appreciate your work.
If there is no more business before the committee, this meeting is now adjourned.
Okay, thank you. Good meeting. Thanks for the explanation.
Thank you.
It's good to, it's just good to get into the